Gold versus Bitcoin, which is really better? Hey everyone, Andrew here, your friendly neighborhood crypto expert, and welcome back to BitSpools. Today, we're diving into a debate that's been raging for ages, gold against Bitcoin. We all know that when it comes to things like sports teams, political parties, or even Tesla's stock prospects, people love to pick a side and stick with it, come what may. And on Wall Street, one of the biggest debates is between the Bitcoin bulls, like MicroStrategy's Michael Saylor, and the gold bugs, like Peter Schiff. These two assets couldn't be more different. Gold has been a medium of exchange for thousands of years, while Bitcoin's first known transaction was in the new millennium. Gold is more popular with the baby boomer generation, while the younger crowd has embraced Bitcoin. But here's the thing, Bitcoin is often called digital gold because they share some key similarities. Even though gold is physical and Bitcoin is digital, both involve mining. Investors see both as stores of value, a way to hedge against inflation. And both are scarce. Bitcoin has a maximum supply of 21 million, while gold production is expected to slow down in about 25 years. Now let's talk about the elephant in the room, government spending and inflation. Those COVID-19 stimulus checks, the Clean Energy for America Act, and the U.S. support for conflicts like the war in Ukraine have all contributed to massive government spending. Throughout the 2000s, U.S. government spending has reached new highs. The national debt has ballooned to more than $35 trillion, with the interest on that debt expected to reach a mind-boggling $1 trillion in the next few years. Both political parties have been responsible for this exploding debt over the past 20 years, and neither seems motivated to fix it. While Jerome Powell and the Federal Reserve have managed to bring down the inflation rate with higher interest rates, the fact remains that consumer prices are 20% higher than they were in 2020. The U.S. is still a powerhouse in the global economy, but these deficits can snowball. History is littered with the economic remains of countries that went on spending sprees, like Venezuela and Turkey. Whether you believe the deficit is an existential threat or not, inflationary hedges like gold and Bitcoin have a place in most portfolios. So, is gold or Bitcoin a better long-term investment? Now, I'm a price action trader, focused on technical analysis and catalyst-driven investing, but I also own both Bitcoin and gold in my long-term accounts, so I'll try to be as unbiased as possible. Over the last decade, Bitcoin has been the top-performing asset globally, averaging a mind-blowing 693% annual return. Over the same period, gold has averaged just over 5% annually. Whether you compare Bitcoin to gold or any other asset, Bitcoin wins the total return debate, hands down. But what about store of value? That's where things get interesting. The saying, "there's no free lunch," is relevant here. To achieve significant returns, you have to be okay with more volatility. Since 2012, Bitcoin has suffered a 70% drawdown, two 80% drawdowns, and a 90% drawdown. Conversely, gold's worst drawdown over the past 40 years was 54%. So, which is a better store of value? It depends on your time frame. If your grandparents were looking for a safe asset to hold its value over a 3 to 5 year period, gold would be much more likely to avoid a deep drawdown. And it would be much less stressful to hold because it's far less volatile than Bitcoin. Let's talk about survivability. Gold has been used as a medium of exchange for thousands of years, giving it a huge advantage in the survivability department. Gold has been around for millennia and will probably continue to be. But Bitcoin has weathered some tough storms in its short history. It survived the demise of the Silk Road online marketplace, the Mt. Gox exchange hack, the 2008 global financial crisis, and the FTX exchange fraud and collapse. Despite these tense moments, the Bitcoin network has never been infiltrated due to its unique network attributes, like its distributed ledger and its proof-of-work mining protocol. Still, gold has a long track record as a store of value that Bitcoin can't match in such a short time. Now, let's look at usability. Each asset's strengths are the other's weaknesses. Gold bugs prefer it because it's tangible and used in jewelry and electronics. Bitcoin bulls prefer it because it's digital and easier to use for transfers and international remittances. What about demand? Both asset classes are in high demand. The SPDR Gold ETF was the largest ETF launch until the iShares Bitcoin ETF came along and stole the throne. From a retail perspective, massive demand for Bitcoin has led to healthy profits for crypto exchanges like Coinbase. Meanwhile, retail giant Costco reportedly sells $200 million worth of gold bars every month. Central banks set a gold buying record in the first half of 2024 as BRIC nations like China seek to move away from the US dollar. At the same time, El Salvador holds hundreds of millions of dollars worth of Bitcoin. So, should you buy gold or Bitcoin? If you've made it this far, this is the answer you've been waiting for. The truth is that the decision to invest in gold or Bitcoin comes down to each individual. If you want to preserve your capital and limit volatility in your portfolio, gold is the right choice for you. But if you're willing to ride out more volatility in exchange for capital appreciation, then you should be more heavily weighted towards Bitcoin. Remember, just because there are strong feelings on both sides of the debate doesn't mean you can't own both in your portfolio. Evaluate your goals and risk appetite and find the right investment mix for your situation. Speaking of investments, did you know that you can get a welcome bonus of up to $5,500 for newcomers on the BitUnix cryptocurrency exchange? Click the link in the video description to get started. Don't forget to like this video and subscribe to the channel if you haven't already. We'll be back soon with more crypto insights. Until next time, keep those sats stacking and remember, invest responsibly.